guys? Dividend Dandy here, and today I would like to give you superb dividend stocks. And the time I'm recording this video, it doesn't really matter the time I'm recording this video because I believe, my opinion, these are all great companies that will be here for a long time, and I believe they'll be here for a while. So today's price could be good in the future, but none of this is financial advice. I'm not a financial advisor. General opinions only. Do not take anything personally. I'm not sponsored. Any similarity is merely coincidental. The numbers are unreliable. The statistics too. This message does not contain any investment recommendation, advice, or solicitation of any sort of product or service. The views expressed are strictly those of myself, even if they are not views held by the author or directly contradict those generally held by the author. Also, the opinions may differ from those of institution or person that the author may advise or is associated with. Oh, yeah. And past performance is not indicative of future returns. That being said, let's see, 5 superb dividend stocks. Number 1, Starbucks. Right now it is trading at $82.73 a share. Now, Starbucks, as the world starts to go back to normal here and people start going back to work, more people are going to start going to Starbucks in their morning routine every day. So I expect Starbucks to kick back up as the world starts to open back up. And right now it's trading at 22.31 times earnings, the PE ratio, and I like to see the PE ratio below 25, so that's good. The dividend, Starbucks keeps raising their dividend every year, which we love to see as dividend investors because you get a pay raise every year if the company keeps raising their dividend. So $1.96 a share per year, which is right now at 2.37% yield. Pretty good and can get better with Starbucks in the years to come. Earnings per share, 3.71 earnings per share. The 52-week range, 82 to 126. It's right at the 52-week bottom, but it could keep going lower. This is not financial advice. It could keep going lower. We'll see. With the war right now and inflation and the Fed, who knows what's going to happen here? But best way, just keep dollar cost averaging your way down because nobody could time the bottom, but you could dollar cost average and get pretty close. The analysts have Starbucks as a moderate buy and high price target of 136, which indicates a pretty nice return in just 1 year if that analyst price target were to hit. So I like to have my Starbucks dividends pay for my Starbucks, which is a great thing. If in principle the dividends can pay for your own coffee, that's why I like Starbucks. Next we have Microsoft. Ticker symbol MSFT. Microsoft is the number 2 biggest company in the world, I believe, and right now it's trading at $2.79. Earnings per share 9.4. P ratio 29.8. Which I like to see below 25, but Microsoft is such an exceptional company, and they recently acquired Activision Blizzard. And just for 80 billion cash or something around there. And that just shows how much cash they have on hand, which is a great sign that they just have that much cash on hand to buy another business and keep growing their own business. The dividend yield is $2.48 or 0.89% yield. It's not the best dividend, but it keeps growing, which I love seeing as a dividend growth investor. they just keep growing their dividend, and who knows 10 years from now how big it would be. And 52-week range, 229 to 345. Microsoft is it had a recent pullback here, but most of the market has in the past few months. But Microsoft, the analysts have a strong buy, highest price target of 425 a share, which would indicate a big upside. I just think Microsoft's a great company and it's here to stay. Now, BlackRock is investment company. They make the iShares ETFs. There's so many iShares ETFs out there, and I believe they have $10 trillion in assets under management. That is a lot of money. Can't even wrap my head around that. $10 trillion BlackRock has. And right now they're trading at $6.87 a share, 17.98 P ratio, 38.22 earnings per share, dividend yield $19.52 a share, 2.84%. And they keep raising their dividend as well. I love these companies that keep raising their dividend every year. You keep getting more and more passive income through dividends. That's what I love seeing as a dividend growth investor. 52-week, 660 to 973, and the analysts have it a strong buy with the highest price target of $1,066, which would indicate strong upside for BlackRock. Now, I did hear they have a small position in Russia, but I think BlackRock is here to stay, and they have so much assets under management, and I think they make a good ETFs too. The iShares like DGROW, Dividend Growth ETF is a good one. But there are so many. They make the iShares ETFs, and I think BlackRock's a good investment company. Next, we have Home Depot. Home Depot, everything that you need for a household, where it's wood, lawnmowers, fertilizer. The dad's favorite store is Home Depot. I know my dad loves Home Depot. Right now it's trading at $317, 15.52 earnings per share, 20.42 P ratio below 25. Dividend yield is $7.60 a share, 2.4% yield. 52-week, 266 to 420, high, low and high. The analysts have it as strong buy, the highest target 455, which indicate a lot of upside. Now, with this drawback, people could buy the dip, and you could be very happy in the future. I can't tell you how the market's going to go, but over in history, the market keeps rebounding after dips. I don't know how far the dip's going to go. Sometimes the dip goes really low, sometimes not so much. But I think Home Depot is a great company, and they keep raising their dividend as well every year. I love these dividend growth companies, guys. Keep increasing my passive income. And I think Home Depot is a great company. If you ever go there, they have such a wide variety of essential products to the household. And I think Home Depot is a great company. And last, we have Johnson & Johnson here. And Johnson & Johnson's been around for so long, and I think they're such a great company. They have such a wide variety of products, as you can see in this picture. And Listerine, Rogaine, Tylenol, Band-Aids, just like shampoo, all over the place. Zyrtec for allergies. And then they make medical devices too. And the world's population and the United States population keeps growing. And the world is also getting older on average. So healthcare products, anything healthcare, I think could be great in the future. because of the aging world population and the growing world population. People are living longer, and these products are great. They're wide variety, and they make medical devices that are also in the hospital. So I think Johnson Johnson's a great company, trading at $1.69 a share, 21.68 P ratio, 7.81 earnings per share, 424 dividend, 2.5% yield. They are a dividend king. They've increased their dividend each year for over 50 years. Which is crazy, and I hope they keep increasing their dividend, and I think they can for a while to come. I think Johnson Johnson's a great company, and they've been here for a while. I think they'll be around for a while, and I think I'm not sponsored by any of these companies. I just think I enjoy these companies, and I like to see that they grow their dividends each year. And thanks for watching.